Hello and welcome to Closing Trades, and what a market it's turned out to be. NIIT Technologies first. We're in the thick of numbers. Let's bring on board Sudhir Singh, the CEO designate at NIIT Technologies. He joins us on the show right now. Sudhir, hi, good afternoon. Just walk me through what the numbers are looking like and how do you feel after the quarter gone by. It seems like an impressive performance. While the EBITDA has been largely flat this time around for you, there's been a growth when it comes to the PAT as well as the top line. Give us the key highlights.
So let me give you a quick sense. We are very pleased with the numbers, and we are pleased with the numbers on multiple counts. As you would have seen, the revenue numbers have gone up 2.6% quarter on quarter. Year on year, the same numbers have gone up 9%. Operating margin numbers, as you would have seen, have gone up 96 basis points quarter on quarter itself, which again is something that we feel very good about. And importantly, from our perspective, if you look at the order intake, new order intake, that number has climbed steeply to $130 million US. Executables has climbed very sharply to $329 million, and the number of new clients that we've added was 8 in this quarter, coming off the bat of 7 added in the previous quarter. So if you look at the numbers, and if you look at our outlook, and if you look at some of these trends that I talked about, we feel very good about the results.
Okay, great. Would you say that you will be able to maintain this kind of performance or actually up that, considering you seem a little more hopeful about the deal pipeline and the order pipeline going forward?
We feel good about it. So to the point that you said about deal pipeline, the number of large deals that we've just closed in this quarter itself is 3. It was 2 the previous quarter. The order intake numbers that I referenced again have seen a steep upward trend. Now those are good leading indicators in terms of the effort that's being made at the front end. So we do feel good about these numbers, and we feel we should be in a good place moving forward as well.
Sudhir, give us a sense as to what the outlook is in terms of your overall segmental revenue. What are you expecting by way of individual segments, and where will you see the maximum growth?
So, as you know, we primarily play across 3 segments. We play across insurance, we play across travel and transport, and we play across financial services. Where we sit right now, and as we look into the future, we feel good about all these 3 industry segments. Some of it gets reflected in the numbers that you're already seeing this quarter, where you've seen financial services grow 4% quarter on quarter. You've seen travel and transport, after a while in our case, grow 4.4% quarter on quarter. As we look at the spending patterns that we are seeing sitting in January right now for the rest of the year, for travel and transport, for insurance, and for BFS, which for us is largely asset and wealth management, we feel good about the spend buckets and the outlooks from that end, and we feel very good in terms of the front-end engine that we've been very, very consciously building.
And what's the sense that you're getting in terms of your digital revenues? How do you see that scaling up?
Good story again, good story. Digital revenues have grown 11%. Digital revenues now are a quarter of our global revenues, so that stands at 25%. The corresponding metric last quarter in terms of digital contribution to aggregate NIIT Technologies revenue was 23%. So the needle on both fronts has moved well for us.
Finally, I know you're extremely confident about growth being maintained, or for that matter, you even bettering your performance in the future quarters. But for this quarter, your EBITDA margins are around 17%. What sort of an improvement are you aiming for, if you could just put numbers to that, over FY'19?
So if you look at our operating margins, the 17.1% that you're talking about has already seen a 96 basis points improvement over the last quarter. We expect margins to go up marginally over time.
Okay, so that would mean sub 20 or around 18, 19 odd percent?
At this stage, I guess the best I can tell you is there is going to be an improvement. It's going to be a marginal improvement over the 17.1% that you've seen in this quarter, moving forward as well.
Good chatting with you, and good luck with the future quarters. I'm sure we're going to speak again. That's the word then from the NIIT Technologies management. They're extremely hopeful of the kind of order pipeline that they're currently sitting on, and they do hope for better margin trajectory, although a very minimal up move from the current 17.1% EBITDA margins that they've posted in the third quarter. Move forward then, and